Hello. Second weekly video call today with a focus on three global macro topics and an overview of European sectors as usual. The first global macro outlook will be on US dollar and US equities. Then I will discuss some demand signals, correlation, decorrelation between VXN and VIX, and after that we'll talk about European sectors. High correlation, as you can see, between euro dollar and S&P 500 since April. So the weakness of the US dollar is obviously good news for the S&P, and both charts are hitting new highs right now. So the main question from a technical point of view is how high can these two charts go in the short term. So if you look at the dollar index, so long-term chart, this chart is since 2011. The weekly RSI is at its lowest level right now since 2011, so it's here. So quite significantly oversold and getting close to an important support zone found between 94 and 92. So I think that from a midterm point of view, the risk reward of the US dollar is quite interesting. So it's a potential contrarian buy at current level. Now, euro, if we look at the euro dollar, major trading range forming over the last 3 years. Right now, my feeling is that the sentiment is exactly the opposite of what we saw at the start of the year when the euro dollar dropped below 105. At this time, the consensus was expecting a further decline to 1, so parity. And right now, I think the consensus is exactly on the opposite side, turning quite negative on US dollar. But I think that once again, we are going to have a false technical breakout and probably a move back into the trading range, so which means below 116. So in terms of demand signals, the S&P 500 completed a daily perfected setup 9 sell a few days ago. So I think what's going to happen is quite similar to the previous setup 9 sell. It doesn't mean that the S&P will not go higher in the short term, but what we are more likely to see is more or less a sideways range forming within coming weeks and possibly until September. Another interesting signal is on US 10-year bond yields with a setup 9 buy completed a few days ago and followed by a significant bullish reversal. So this confirms what I told you last week, limited downside potential, then probably the next big move will be an upside breakout above 240. Dollar yen also completed a setup 9 buy a few days ago around an important support level at 111. Which was also a TDST support line. Once again, I would favor the start of a new up move back to 114 or even higher. This is the forecast I made last week regarding dollar index. So in the first video, following the setup 9 buy signal we had last week. So what I was expecting is marginally low back to 94, then start of a technical bounce. So I still think we are unlikely to see much lower levels, and probably it's just a question of time before we start to see a significant technical bounce. Another important demand signal is on gold. So daily setup 9 sell on TDST resistance line. So what's happening right now is a short-term pullback. However, I would favor a limited downside potential followed by renewed strength, potentially back to the upper part of the range at 1300. Setup 9 sell a week ago on Brent. It's quite interesting to see that the correction did not last long, so we just had a 2-day setback, then a breakout above an important resistance at 50. I see it as a positive event for oil prices in the short term, and I would favor a continuation of the rally back to 52, 53, maybe even higher. Last global macro comment is the decorrelation we are seeing between the implied volatility on Nasdaq 100 and VIX. So very strong rise over the last few months on this spread. If we look at the long-term chart, so spread between VXN and VIX, it's back to its highest level since late 2006. As you can see, it's not a very good indicator to forecast the top, because each time we had a spike on the spread, the index continued to move higher. But once again, we saw that markets became a bit more volatile after the signal. And in terms of trading strategy, I think what would make sense would be to go short VXN and long VIX, which is back to incredibly low levels and near record lows. Last comment is on sectors. So this is the matrix I published in my weekly report on Monday. A strong leadership of financials right now, and basic resources continue to strengthen. And on the other hand, all most commodity sensitive not commodity but bond sensitive sectors are continue to lag. There is just one sector which is improving in the short term. It's telecom. So this sector is bottoming out and could be considered as a good trading buy. On the other hand, so two sectors are suffering from the weakness of the US dollar, so industrial, goods and services, and autos. I think it could be an interesting contrarian call if you think the US dollar is going to hit a low anytime soon. These sectors are probably going to rebound. So especially there is one stock I monitor in the industrial goods and services sector. It's Siemens. I think the stock is becoming significantly oversold and backbounced to only its 200-day moving average. One more comment on oil and gas, which continues to lag, but there is now a significant decorrelation between basic resources and oil and gas. So I showed this chart in my morning report today. So you can see that the spread is back to its lowest level of the year, near multi-year lows. So I think what's going to happen is a tightening of the spread. So start of the technical bonds of oil and gas against basic resources. So it could be a quite interesting trading buy idea in the short term. Thank you for listening and have a good day. Notice that the next video will be after mid-August, because I will be on holiday in the next week. Thank you.